Good morning, good afternoon, good evening, and welcome to a new episode of PairTrade Finder PRO for the February 2022 edition. In this episode, we're going to analyze the companies that are represented by the tickers AMRC and BLD, which belongs to companies Ameresco and TopBuild, both in the construction and energy saving sector. And the signal was triggered on the 24th of January, and the exit was done on the 9th of February. So the objective of the video, as always, is to double check whether this trade is worth to being taken or not. So in order to do that, we are going to go through each of these parameters and try to assign a color code to it to have a visual image of the decision we're gonna make. So very first thing to do is check news, as we always do, and in order to do that, I'm gonna go to Ameresco, and on the 24th of January, there's nothing very relevant that I can see, apart from the fact that, several analysts were saying that the value was undervalued, but that is good news, because that's what we want to see. We want to see an increase in the tendency, but not peaks. So Ameresco is okay from a news perspective. And then if you do the same thing with TopBuild, which is in this screen, what you see is on the 24th of January, there's nothing around in terms of news that could affect the price substantially. So it seems that we can give a green to this box here. So let's do it. Okay, so next box, next parameter is earning dates. We want to see at least 30 calendar days in both legs, which is 20 something days of trading. And that is something that it was also okay, because signal was on the 24th of January, as we said, and the first earnings date was for BLD on the 22nd of February, of course. AMRC was on the 28th, so that gives us time enough in order to let the trade run properly. So from that perspective, this one is also a green. In terms of dividend dates, to the best of my knowledge, these two companies doesn't pay dividend dates, so this shouldn't be a concern for us in our decision-making process. Per momentum, in order to try to make a decision on this, let's go to our charts and take a look to the ratio for the pair, and this is what we see. This is the signal on the 24th of January, and then you see that on the left it has been pretty flat for the last almost 6 months. It is true that it was trending down prior to the signal, so let's go in more detail to the values itself. And if we see AMRC on the 24th of January, we see that we were in this valley where the signal was telling us that we should buy AMRC, so Ameresco. And that is good news, because this is telling us that in a upwards trending chart, the trade is telling us to buy in this low which is something that from a technical perspective makes complete sense. BLD, we go also to the 24th of January. We see that it's not in that clear situation because we have to go short on BLD. But anyway, being so correlated, this is something which is normal. But let's go back again to the charts, to the ratio chart. And as we see that there is kind of question mark here because of this downtrend, we're gonna go and mark this box as a yellow. So we do that. Next one is the ratio chart. In the ratio chart, we go again here and we see that the signal was triggered in an extreme situation. So this is in a resistance. We could say that it's in a resistance in this resistance level. So from that perspective, this is also another green here. Standard deviation and percentage from mean. So we want to see a standard deviation above 2.7, but we don't want to see peaks, very substantial peaks, because that should mean that something was happening with the trade, and we don't want to see things that could affect very abruptly. But if you take a look to the different parameters, to the different values, what you see is that the standard deviation on the 21st of January was 2.49, and then 2.73, and then 2.22, coming from 2.38. So it's not really an exaggerated growth, and that's what we want to see. So standard deviation, in my opinion, is clearly a green. Next one is RSI chart analysis. So again, we go to our chart, our RSI chart, and we see that the exit is in a very extreme situation. That is a value of 9 point something, which is pretty low, and that means that clearly the probabilities for the ratio to revert to the media are pretty high. So I'm going to mark this one also here with a green. Correlation, we want to see, let me go back just for a second to the RSI and try to check the divergence in terms of RSI. And unfortunately, in this occasion, I don't see an RSI divergence. So, well, this is something that you should take into consideration if that is part of your trading. In our case, the value, the RSI value being below 10 is so extreme that we could easily live without the RSI divergence. Next one is correlation. As you know, we want to see a correlation that is above 70% in the my watch list and above 60% in the backtest, but we always give a little bit of room here if the co-integration is good enough. We're gonna try to take a look to that. Correlation when the signal was triggered was at 79, which is above our threshold. So no problems with that. We can mark this one here also with a green. It is also important to check in the backtest chart what is the co-integration for the last on the backtest history. In our case, is 2 years, because this is a first 50 pair, and the average correlation was almost 50%, slightly below the 60% that is our threshold, but having this nice co-integration, we can still maintain our green here. Co-integration, it was above 0.88 on my watch list, and as you already see, it was in the backtest 0.95, which is well above uh, uh, 0.9, which is the threshold. So again, this one here is another green, clear green. Volatility. We want to see a volatility which is below 2.5. If volatility is for whatever reason above 3, we always recommend to downsize the legs, the size of the legs, because if it goes against you, it can make a good damage in your P&L curve. So in our case, let's go to volatility, and what we observe is that when the signal was triggered, it was 3.42, 3.40, which is slightly high. And then because of that, we're going to do two things. First, we're going to mark this with the yellow, but we are also going to decrease the size of this trade to 2500. So instead of going as we usually go with 10,000 or 5,000, this time we're going to go small and do it with 2500. Because again, volatility is, well, almost above our threshold. Now, next parameter is component annual growth rate and the drawdown in the backtest. So we want to see a drawdown that is below 20%, and we want to see preferable a CAC-R which is higher than the drawdown. Let's see in our backtest what happens with that. We have a compounded annual growth rate of 20%, which is very, very big, and a maximum drawdown of 14. So this one is bigger than the maximum drawdown, and that is very good news. The drawdown is not above our threshold, although it's a little bit high, but having this CAC-R above the drawdown, we can easily say that this is also another green. So we put here another green, and then finally, what we observe is that most of our parameters are in a green status, so our overall is clearly also a green. Now, let me show you something else which is important in the backtest. The gross profit of the trade in 2 years, there were 6 instances, and the add up of those 6 instances is a gross profit of above $1,000. The average net profit of the trade is almost 200, but keep in mind that this is done with a 2500 per leg. So this is a very, very good net profit per trade. And also another important thing is that 100% of the trades were winners. So this is something that again clearly are telling us that this is a trade worth being taken. So with that, we end up in this situation, which is clearly a trade that we can go for it without too much problem. Now, let me go back again here, because I want to show you also that in 13 days, which is the amount of time that it took for the trade to complete, we generate 445, almost 446 dollars. So keeping in mind that, again, this is being done with 2,500 per leg margin, this is a very, very high profitable trade. So to give you an idea, this is a trade that is translating these numbers. It is a return on margin of 8.92 in just 13 days. So if we extrapolate that to 1 year, in 1 year that would give us a return on margin of more than 170%. So it is a very, very interesting trade. So let me go back to our presentation and just to tell you that, okay, once again, the trade was worth. I would have taken it, and with that, let me wish you very good luck with your trading, and I'll see you in the next episode. Thanks so much.